Have you ever heard about a business deal that was so big the numbers were almost abstract?
Yeah.
But what really gets you is the audacity, the confidence in the face of massive risk.
Oh, yeah.
And you might be wondering what that looks like in practice.
Right.
We have an amazing example for you today.
Yeah, absolutely. We're going to dive into Chevron's attempt to acquire Hess for $53 billion.
Wow.
And it's not straightforward because ExxonMobil, who already partners with Hess in a key oil-producing region, has basically thrown a wrench into the works.
Right, and that's what makes it so interesting.
It really does.
So the mission today is to kind of go into this and understand why Chevron is so intent on this acquisition.
Absolutely.
And what's behind their seeming confidence.
Unwavering confidence.
Yeah, in the face of this challenge from Exxon.
Yeah.
And to do that, we're going to be looking at some analysis from the Motley Fool.
Great source.
Yeah, to really help us understand what's going on.
Yeah, let's get into it.
Okay.
So back in late 2023, Chevron announced this agreement to take over Hess for that huge sum.
Right.
Now a move of this magnitude begs the question.
What is going on?
What is the driving force behind it? What's Chevron's motivation?
Yeah, I mean, Chevron's a giant already, so why do they need to do this?
Right.
And what we've learned is that Chevron's primary goal here is to significantly boost their production.
Okay.
But I think even more importantly, free cash flow.
Yes.
Well into the next decade.
Yes, extending their growth outlook, way out.
And they see Hess as this key piece that kind of plugs right in.
Absolutely the missing piece of the puzzle.
So I think it's interesting to contrast this with another deal that was announced around the same time last year,
Right.
which is ExxonMobil acquiring Pioneer Natural Resources.
Yes, and that was already done.
Yeah, that's closed already, and that was really to enhance their position in the Permian Basin.
Absolutely bolstering their shale oil production.
So this deal with Chevron and Hess is really interesting because it's held up.
It is.
Yeah.
And this delay stems directly from Exxon's involvement with Hess.
Which brings us to the drama.
The central drama. Guyana and the Stabroek block.
That's right, the source of all the friction.
So can you explain to us what's so important about this?
Sure. So the core of the issue is that Hess owns 30% of the Stabroek block,
Okay.
which is operated by ExxonMobil off the shore of Guyana.
I see.
And to really understand why this is such a big deal, you need to understand just how massive this oil find is.
So 11 billion barrels.
That's right. An estimated 11 billion barrels of oil equivalent.
Wow.
That's huge.
That's a lot.
It's a giant oil field. And it's not just the volume, it's the profitability. We're talking high-margin oil production here.
Okay, so this is really valuable stuff.
Extremely valuable, and the projections show significant growth in the coming years. So this is only going to get bigger.
Wow.
And the analysts we looked at really emphasized just how crucial this asset is to Hess's overall value.
Okay.
Estimates suggest that Hess's 30% share of the Stabroek block accounts for something like 70% of the entire company's worth.
Wow, so this is really what Chevron is after.
That's right, and why Exxon is paying such close attention. So with Chevron wanting to buy Hess, and this massive chunk of Hess's value tied to this Exxon-operated block, Exxon has some issues.
They do. They've raised an objection.
And what is their argument?
Their argument is that the Chevron-Hess deal triggers something called a change of control clause
Okay.
that exists in their agreement with Hess and CNOOC,
Yeah.
which is another partner in the Stabroek block.
I see.
So Exxon's position is that when Chevron buys Hess, it essentially changes who their partner is in this critical project, and they believe that violates the terms of their original agreement.
So what does Chevron say?
Well, Chevron disagrees.
Classic.
They have a different interpretation of this change of control clause.
Right, and this is why we're here.
This is at the heart of the matter.
This difference in interpretation has led to arbitration.
Exactly.
So for those who don't know, arbitration is basically a way to resolve these kinds of disagreements outside of a traditional court system.
Right. It's a private process, but the decision is legally binding.
So it's serious stuff.
Absolutely.
Yeah.
And a ruling is expected around May of next year.
That's a long time.
It is a significant delay for a deal of this size.
And what's really interesting is how Chevron is acting during this waiting period.
Right? What are they doing?
Their actions strongly suggest that they are really confident they're going to win.
Okay.
It's not just talk. They're actually putting their money where their mouth is.
How so?
So since the beginning of the year, Chevron has been actively buying up Hess's stock
Interesting.
on the open market.
Okay.
And we're talking about almost 5% of all the Hess shares out there.
Wow.
Which is about 15.4 million shares.
That's a lot of stock.
That's a ton.
So how much money are we talking about?
Well, Hess's overall market value is around $46.5 billion.
Okay.
So Chevron's buying spree represents an investment of well over $2 billion.
That's a serious chunk of change.
Yeah, and there's a strategic element to this, too.
Oh, how so? Okay.
So if the deal does go through, Chevron will have bought a good chunk of Hess at a better price than what was outlined in that merger agreement.
Oh, I see. So they're getting a discount.
Yeah.
Essentially. So they save money if the deal closes.
Right.
Clever, but it's also risky.
Yeah, there's definitely a downside here.
If they lose this arbitration case, the value of Hess stock is likely to take a hit.
Yeah, so that $2 billion investment could go south.
It could, but it really highlights how confident Chevron is that they'll win this thing.
Yeah, and this is not just them sitting on the sidelines.
Right.
They're actively positioning themselves to be ready to go when and if that deal is approved.
It really does show their level of certainty.
But here's the thing.
What's that?
It's not just about Guyana.
Yeah.
Chevron's interest in acquiring Hess goes beyond the Stabroek block.
Okay. I'm intrigued. Tell me more.
So Hess also has this really strong position in the Bakken region.
Oh, that's interesting. The Bakken Shale in North Dakota.
Right. And this would give Chevron a third major U.S. shale operation.
Adding to their Permian and DJ Basin holdings? That's right.
So they're diversifying their shale portfolio.
And this is a big deal because the Bakken is known for strong cash flow generation.
Yeah, consistent, reliable cash flow from those shale assets.
Exactly. And Hess's operations up there are well integrated with their midstream assets.
Right, so they have their own infrastructure for transporting and processing oil and gas.
Which means a really stable and profitable revenue stream.
Okay, so that's the Bakken. What else is there?
So beyond that, Hess also has some positions in the Gulf of Mexico and Southeast Asia.
Interesting.
They might not be as huge as the discoveries in Guyana.
Right.
But they would still add to Chevron's existing operations in those regions.
So bolstering their global portfolio?
Yeah, and enhancing their free cash flow in those places.
Okay, so it's not just Guyana, it's the whole package.
It's the big picture.
So Chevron's saying we want all of Hess, not just a piece.
Exactly. They see Hess as this perfect fit for their global goals.
A valuable addition to their existing assets.
And all of this plays into some pretty impressive financial forecasts. Oh yeah, how so?
Chevron is projecting that buying Hess will double their free cash flow by 2027.
Wow, that's significant.
That's a lot of money.
It is a huge jump and really highlights the potential of this deal.
And beyond that, they're expecting that this deal will extend their production growth well into the 2030s.
Wow, so a long-term play for growth and increased profitability.
Exactly. So when you put it all together, their confidence in winning that arbitration, the billions they're spending on Hess's stock and these huge financial benefits, it paints a really clear picture of a company that is betting big.
They're all in.
Yeah, on the success of this deal.
It's like they're saying, we're so sure we're going to win, we're putting our money where our mouth is, but on a massive scale.
Billion-dollar scale.
Exactly.
So the key takeaway for you listening is that Chevron is demonstrating a really remarkable level of confidence.
Yeah.
Backing it up with billions of dollars in their pursuit of Hess.
That's a bold move.
Driven by the potential of the Guyana oil fields.
Right, those massive reserves.
But also the strategic fit of Hess overall.
Absolutely. They see the value in the whole company.
And this whole situation brings up a bigger question.
What's that?
Considering the size of this investment.
Yeah, billions of dollars at stake.
And the potential outcomes.
Right. It could go either way.
What does this tell us about the appetite for risk among these huge energy companies?
Especially as they're looking to secure future growth and resources.
It's really fascinating.
It's this intersection of complex legal battles.
Right.
Bold financial strategies,
Uh-huh.
and this evolving global energy landscape.
Definitely something to think about.
A lot to ponder.
Yeah.
Thanks for joining us.
We'll see you next time.